factor at the moment. I don't think that's going to happen. We feel confident in our analysis that we're well within the law.
Also want to talk to you about the world of stablecoins, and particularly Binance's stablecoin, which you've just determined or decided is no longer meeting listing standards. What does that mean?
Right. Well, we always are looking with our internal processes at any asset that we support or we delist. And as new information becomes available, we'll update our analysis. In this case, Paxos, who's the US-based company that's issuing BUSD, they decided that they're no longer going to mint it. And I think they got a court order to do that. And so if that caused us to feel like, well, to protect our customers, if there's liquidity issues, we shouldn't support it anymore. So that's why we delisted it.
Do you have concerns about Binance itself? And I know they're a direct competitor of yours, but Sam Bankman-Fried, as you know, who of course now has been indicted at FTX, was very outspoken about Binance as a company and his concerns about that company. Do you have the similar concerns?
Well, look, I'm not here to criticize any of our competitors out there. We have competitors across a wide range of products out there. Look, I think what I would say is this, without a clear rule book that everybody can follow here in the US, more of this business is going to get built offshore, and that's actually going to cause potential for harm to customers in the US. We need this industry to be built here in a regulated perimeter.
Right, but what do you make of the idea? That's a firm, by the way, that has no intention, I don't think, of being regulated. And again, what's going to happen on that exchange is there's going to be coins, again, that also won't be regulated, but those same coins will be exchanged on yours, right?
Well, look, we look at every asset independently. I mean, just because something is issued offshore or it's traded somewhere else, that's not really going to be a factor in whether we decide to list it. We want to make sure that that asset follows the laws of the United States, that it meets our compliance obligations, that it meets our cybersecurity review, things like that.
I wanted to ask you what you're telling investors these days, because when you look at the valuation of the company, it has been on quite a run this year. That's the good news. Since the company went public.
Okay, welcome back, and you heard the live interview of Coinbase CEO, the boss, and he avoided one very fundamental question. I think that was a great question. It was also in our scope of questions that we pose when we are advising the government on cryptocurrency laws. And that is, not necessarily all the coins will be regulated, step one. And some of those coins, they are not regulated, but they appear, especially on Binance, as a crypto exchange, step two. That means to say, in the universe of coins listed on Binance Exchange, those coins may also appear in a universe of coins in Coinbase. How do you handle that? He avoided the question totally. All right, so the entire crypto market is going through such a big change, especially the real policeman is Gary Gensler, who's everybody just trying to second guess what he's going to do next. And that's the reason why, Coinbase, Robinhood, companies that offer cryptos that are regulated in the US, they are in a very nasty spot. All right. Many other countries going to step out on offering regulated entities or regulated crypto exchanges or crypto coins, or in fact, we call it initial exchange offering. So the US is falling behind. That's good, because we don't really know what they want to do. Okay, coming back. We are still at question number 2, who are making profits consistently. We kind of address question 1 and question 2. And right now we're going to tackle open questions from all of you, just very focused on the who, and thereby once we complete this Q&A, we can move on to the next part of our presentation, all right? So here we go. I'm coming back to my Twitter page, and you have done your homework. Check back. You would know how to visit the different pages. And may I invite all of you back to the camera, put your face in front of the camera, and I really need to see who you are, right? So those of you in the dark, sorry, I got to move you out of the class again. No disrespect, but more about I want to know you. But if you don't want to let me see your face, then I don't think I should teach you at all, because I think we're going to waste each other's time. All right? So thank you, everyone, for coming back. Wave your hands. Welcome back. Okay, very good. Some students missing already, and they're going to miss this part again. So here we go. Boom. Angels, please do your job. Thank you very much. Here we go. Number one, teacher, why do we follow the news if it can be misleading? For example, Charlie Munger, can we not just follow data? How do we know which news to trust? All right, very, very good question. Now, we are following the news because we need to read the pulse of the market. It's like taking pulse of your heartbeat, right? So you need to read the news just to know what's going on. And I'm not asking you to watch CNBC or read the news and straight away, boom, take a position of a stock. No, that's not the way that we trade, all right? We watch to understand arguments from both sides. In fact, just from the interview of Coinbase CEO, you know that he couldn't answer certain questions on air. And those are the things that we think about. Why is he avoiding the question? Why is he not answering straight? Because what they're really troubled about is not the liquidity of Binance USD. It is the most liquid, for goodness sake. What nonsense answer he's giving. It's the top 3 coin on CoinMarketCap. The only reason why Coinbase delisted BUSD is because the Justice Department is after them. So if Coinbase continues to list BUSD, Justice Department will go after Coinbase. As simple as that. He could have just answered it like this, but he chose not to, thereby creating even more confusion. How many of you got what I'm saying? Just wave your hands, right? So that's why I started the class kind of warning all of you. This is the period of time we can only touch one coin, that is Bitcoin. Other coins going through really major overhaul, right? So majority of them will not survive this, let's call it the Passover. All of them will get killed, all right? So just watch, just be very careful. We go back to the foundation of wealth. So coming back to this question, we watch the news so that we get updated. We hear analysis. We hear revelation of new products and services. And let me tell you how difficult it is to get on CNBC. It is extremely difficult because the TV time is so short. That means those who appear on air already gone through a filtering process that the editors determine that the person is notable or the news is newsworthy. Thereby, you are keeping yourself abreast with the latest development in the marketplace. All right, so that's the reason why we watch, not to trade on the news. Next question from Chen Chun. Should we ignore the investor that bought thousands of stock with robot trading and focus more on investor human decision trade? Now, that doesn't mean you ignore them. They are in our top 100. It's just that the human capacity can only absorb and process so much information, if you know what I'm talking about, all right? So in my universe of mind, there's a method I developed called the Fiat method, F-I-A-T, which I'll be showing you guys tonight. And that method kind of helped me flush out all the distraction. But at the same time, we must know whoever is the lead investor. Later on, I'll show you the list of the lead investor into each stock. Are they trading based on robot or are they trading based on human? Because typically among the top 10 lead investors, there's a human decision involved because the ticket size is very big. Could be 5 billion, 10 billion, 1 billion, 800 million, that kind of size. Now that typically is not reserved for robot trading. All right, the moment is the top 10 lead investors. We're going to take a look at that. So for a start, I also encourage all of you to try to align your psychology and anchor against the big investors like Warren Buffett. If you want to anchor him, you want to anchor against Bill Ackman, George Soros, you can anchor against Temasek. But you see, the 2 days that is very, very difficult to teach in terms of priority, number one is this. It is extremely difficult to teach ambition. I cannot push you, coerce you, force you to become a millionaire. That fire in the belly must come out of you. Ambition is very difficult to teach. Now, the second thing that's very difficult to teach is your psychology. Your psychology of overcoming fear and greed. Right? Good days you are good, bad days you are bad. How about every day? What is your psychology? Some people cannot handle stress. They crack easily because they have not trained their mind to go through pain. Now, I'm encouraging you to train your psychology by following and anchoring great investors out there starting from the top 100. Know their story, know the stocks that they're playing, know the average price they're paying, and you buy below them. Done. That's the easiest way to strengthen your fear and greed. But if you are left alone, you're going to be like some of my students in Malaysia come back to me, teacher, I learned from you 5 years ago, I forgot everything. Oh my God, that pains me. You know? Because I expect to teach you one time and you learn for the rest of your life. All right, you follow through, you don't get distracted, and you say yes. That's why psychology is the root of distraction. If you're greedy, you start looking for quick what we call get-rich-quick schemes out there. If you are fearful, what happens? You end up not taking action. So it's a balance. The best balance, look at the top 100, starting from there. All right, so I hope that will help you. Third question. Details of a first buy, then sold a bit. So I don't comment on individual stocks here. It's not following what I'm trying to teach right now. So you have individual stocks, we're going to take a look later. You don't just tell me one stock and I have to, distract the whole class, look at the stock. So please rephrase your question. Any other questions for the topic on who? And next from Penkiet, to follow who, can we mix and match the who to get our portfolio or follow one and scale down based on our budget? Newbie question. All right. So first of all, there's no budget issue. Let me address that. In US, they offer fractional trading. All right? Meaning to say, if a stock is $20, and you say my trade, one more time. Step one, let's say a stock price today is trading at $200 per share. Step one. And you say that my account is only $500. If I buy this stock, I use up close to half of what I can afford to buy. So the good news is, at step two, when you buy, you don't buy one share, you buy 0.1 share. Thereby, it only costs you $20 to own a fractional share of the company. All right? So it's very affordable right now in the US. So make sure you follow our recommended broker, which is Interactive Broker, cheapest on the planet, and they offer fractional trading, and that's why you can get started. All right? So no excuse at all. Whether the stock price, the only exception to this question is, if you want to buy Berkshire Hathaway, I don't encourage you to do that. It's the most expensive stock on planet Earth. All right? I mean, Berkshire Hathaway, you want to buy, it's going to cost you a lot of money. All right? A few $100,000. So no point doing that. Okay, good. Any other question? If not, I'll continue, right? There are copy beneath insiders in the software. How does it work? So right now, we build up our tech to get ourselves ready for copy trading. So we just put the button there right now. It's not fully operational yet, but just to kind of make sure we get it ready for all of the insiders on our platform, all right? Very soon, I hope to announce the good news to all of you, and then you all can start testing it out. Okay, no other question, last refresh. Okay, good, done. So with that, we shall go on to the third question of our class. There are 6 questions that we need to tackle, and then you will master the art of insider trading, right? And the third question goes this way. What caused a stock price to spike? What caused a stock price to spike? So there must be some trigger or catalyst or some events or something that will cause the stock price to spike. And I've given you all a very clear definition of spike. Means there's a no man's land, there's a gap, and the candles do not continue but deviate, right? So that's the definition of a spike. But what caused a stock price to spike? Because I'm taking you through the journey of how we build the product. And the way we go about building a product, there's a lot of thinking process behind. We have to read journals, finance journals, literally to know all about price information flow and all that kind of stuff. And for those of you, you feel you're up for the challenge and you feel you're a learned scholar, I invite you to go to Google Scholar. You can search on stock price, arbitration, insider trading. There are many, many journals published in this area. And all the different scholars write in different areas. So when we were in the very beginning building out the product, I have to go and plow through all these journal papers and to see which one really makes sense. And that I can defend the platform. Defend the platform in the sense that I will ask you, is there a better way to do what we do here at Spiking? Is there a better way to do what we do here at Spiking? You tell me, I build it for you. Because we ask this question all the time. We even check journal papers. For financial news, we like reading every day already. But the real research is journal papers, scholar papers, and then understand how an exchange was built, understand about all the key players, market makers, and all that. And that was how we started Spiking, right? So, if you feel we can do something better, let me know. Thereby, we come back to this question. What caused the stock price to spike? 3, 2, 1, here we go. Based on these 3 words in front of you. I want to make it so simple. Don't even have to second guess one. Number 1. First, I hope you have agreed and accepted the fact that the 3 instruments that will create the foundation of your wealth is cryptos, options, stocks. And we say yes. All right? That means to say the instrument must be found in one of these 3. Then and only then, you can investigate what caused the stock price to spike by studying war. War is a very powerful word, W-A-R. I'm going to go through each one of them, the alphabet, and then you understand, oh, that's how you guys think as an engineer. Yes, let's start with W. It means that there must be a wow event. Wow. That shocked the market, that surprised the market, that caught everybody by surprise. Now, what kind of wow events are there? Many wow events, ranging from appointment of a new CEO, strategic partnership, consideration of strategic alternative, discovery of diamonds, discovery of gold, discovery of oil. There can be earnings announcement surprise, guidance surprise, mergers and acquisition, stock split, stock buyback, CEO resign, CFO resign. There are like over 88 consistent wow news on Wall Street. In fact, some of them, there's lots more, but I kind of contain them in 88 spikes, I call it. But there are so many wow events. The big question is, which one can we predict? Because if you try to predict discovery of diamonds in a certain diamond field, it's damn difficult, right? By the time they announce that, you already missed the opportunity. So thereby, we must bring in our second alphabet, A. The wow news must complement with an announcement date. You need to have a date to predict it. Whether on that day will it come true or not. So without a date, anything that you chase, is wasting your time. That's why many people got distracted chasing the wrong things all the wrong time, because the things that they chase don't have a deadline. You must have a deadline. Thereby you can plan to the future. Oh, next month on the 5th. Oh, next quarter on the 10th. Oh, next year in the month of January. You can plan ahead before the wow news shock everybody. But then even if you plan ahead, still not good enough. We need to tighten the criteria. And the way we do it is the last alphabet, R. It must be recurring. It must be repeatable so that you can consistently make money from this wow event that always come with an announcement date and that's recurring on a regular basis so that you can keep milking this stock. That is the foundation of WAR, W-A-R. So once you understand the concept and foundation of WAR, we go back to question number 3. What caused the stock price to spike? We say the war. You must have a war. No war, no spike. So now it's very easy to remember the concept, right? So all you need to think about is there must be a war coming up, then the stock price will spike. So you understand this. Then and only then, we can introduce to you the third word, fiat. In order to understand war, we need to understand fiat. Now, fiat as a word, it means currency or money. Go and check that out on dictionary.com. And it took us a very, very long time to find this word, F-I-A-T. That represents our fiat methodology of studying each public listed company. Okay? So I repeat, 3 things that will be the foundation of what will cause a stock price to spike. Number 1, the instrument must be correct. You must select a correct instrument that's liquid, that allow us to make our first question, how to make 5 to 100% profit return in 1 day. Straight away, many instruments got eliminated at step 1 here, cozy. So once we agree that stocks, options, cryptos, we go on to step 2. How to catch the spike. There must be a war event. Wow announcement, recurring, repeatable. And how do you know it's going to spike? We apply the fiat method, F-I-A-T. So you also notice that I put 2 important symbols right here. The one on the left represents that most of the stocks that spike, they are invested by the lead investors coming from our top 100. Now you understand our logic. Our top 100, in top 100 that I showed you just now, the 8 categories of investors, they are always taking the lead to invest in stocks that spike somehow. All right? But that does not mean they are playing the spikes like us. They are more of a longer term investor. The second thing is, everything that we do, we always ask this question. Now, this question is so powerful, it does not just apply to the stock market, It applies to your career, your business, your relationship, anything that you do. Will it spike? So how do I explain the concept of will it spike? So will it spike is a concept whereby we say, what is that one thing that will take me to the next level? What is that one thing that will take me to the next level? The one thing could be your wealth, your finances, your relationship, your career, your business. And sometimes those of you, done a career switch, you realize that, wow, suddenly you're under the right boss in the right company, you're a shining star. How many of you been through that before? Wave your hands. Wow, I see so many of you, right? When you have a good mentor, handhold you, boom, your career took off. And some of you into business. Sometimes just one small decision in your business, whether with the right partner or launch a new product, boom, your business took off. How many of you experienced that in business? Wave your hands. Hello? No one experienced that in business. Only one or two of you. Thank you very much. So that is another big thing. And also, I also want to address relationships. Sometimes you are in a toxic relationship and you chop that off. And suddenly you realize, oh my gosh, you're alive and kicking, you're fresh. So it's important every now and then to review toxic relationship so that you can go to the next level of faith, hope, and love, and you start to trust people again. All right? So I can go all night long about this concept, will it spike? But for the purpose of our class, I'm thinking about the stock price. Will it spike? You can also ask this question to yourself, kind of remind yourself, will whatever I do and connect the dots really lead to the outcome I want? That is, I want to see the stock price spiking up. All right? So once we've done that, here we go. We say that we're going to go out there to find all the spikes. We understand the concept already. The fourth question that we really need to tackle is where to find the spikes. Where to find the spikes? Because the third question, which is what caused the stock price to spike, is much more conceptual. Much more about giving you the foundational understanding why some stock price will move violently. Then the operational side of things is where to find the spikes. So this is the operational side of the question. So from conceptual, we translate it to operational. And how do we go about doing that? Here we go. That's where we build out the product, daily bread, resurrection, triangulation, and so on. Now we're going to switch over to our wealth management system. Let's go there together. And here we go. Step 1. Go to the hamburger menu. Click on it. Step 2. Select stocks. Okay, I wait for you because this step you need to do because you're going to have your homework conducted here, right? Click on stocks and you can see we got so many items under the stocks AI. Boom. 8 categories again. Just click on one of them called Daily Bread. Dong. And here we go. This is Daily Bread. All right? Now we say where to find the spikes. We operationalize this question and put everything on the platform. Simple, clean, and most importantly, data-driven. So let me start off by explaining to you right up here. So make sure you're looking at the same thing as I do. You can see the top Daily Bread, Resurrection, and so on, right? Now, right up here, where to find the spikes, the moment we design it, it must be designed based on your time commitment. That means you. But I cannot customize a software that's so customized that it fits exactly your profile. We are not ready to do that yet. So generally, we break down your profile into 8 time frames. So watch. Number 1, the first time frame is designed for those of you fast and furious. You say, I want to get in today, get out tomorrow, 1 day time frame. That means you are committed to sit there on your table for 2 consecutive days. Day 1 today, day 2 tomorrow. You must commit the time. You cannot say report sick, not feeling well, got meetings, got to go party. No, not suitable for you. You must commit 2 consecutive days, all right? 1 day. That means get in today, get out tomorrow. That's make money in 1 day. Now, 1 month is designed for those of you who are busy executives. You say, every month I just commit like 1 day to look at my investment. Now, this is very suitable for you to invest into resurrection stocks. Stocks that save lives, at the same time, you can make money. Some of you so overwork that you can't spare time for the market, no problem. You can only come in once every 3 months. You go on 1 quarter triangulation, right? Now, this is very suitable for those of you who will join my class on Trade Through the Night. Remember, I shared with you Trade Through the Night is where the data is fresh out of the oven on the 45th day. And I'm committed, I already locked down my time every year for the Trade Through the Night event. That means we'll trade through the entire night of the fresh data and buy minimum 20 different companies, all right? So some of you really got no time, that's why you keep joining the Trade Through the Night event. For longer term, we will call GOAT, greatest of all time. Now, this is more like related to my hedge fund work, where we have an investment time horizon between 1 to 5 years, right? We need it to play it out. Certain themes that we look into, like electric vehicle, energy stocks, defense stocks, this kind, we need more time to play out, like 1 to 3 years, some of them 1 to 5 years, because need to go through 1 election cycle. Next one is buyback. This one is 4 years, because 1 election cycle is every 4 years. On a November, that's the US presidential election. Now, this is very, very suitable for playing stock buyback. And the next one is called trillion. For companies chasing $1 trillion market cap, you need to wait like 10 years horizon. This one, you take on the role more like a venture capitalist, all right? So like Spiking, we have VCs on board as our shareholders. They always tell me, Clemen, take your time to build Spiking. We can wait for you. All right? And I know their waiting period. Wow. The more they say this to me, the more pressured I feel. Next one is YOLO, 1 lifetime. This is the one I highly, highly encourage you to own Bitcoin. All of us should own Bitcoin in our lifetime because it will eventually prepare us for the Generation Z. Now, who is Generation Z? My 3 boys are in the Generation Z, literally born what we call the Zoomer generation. They attend school watching Zoom. But when my eldest son is around the age of 26 years old, let me tell you the secret. Remember, we started off the class, we say that every generation there will be an instrument that will create the first batch of millionaires in that generation. Baby boomers, stocks is the instrument. Generation X, options trading is the instrument. Millennials, cryptos is the instrument. Now, Generation Z, let me tell you what's the instrument. I strongly believe that it will be an instrument deriving its value from Bitcoin. Just like options trading is deriving its value from the underlying securities, which is the stock. And the instrument will start to appear when my eldest son is around 26 years old, which is around year 2030 to 2032, that range. And suddenly all of his friends will be playing that instrument. That will be the instrument that will help my children's generation to become the first batch of millionaires among Gen Z. All right? Then finally, we have the last instrument right here, a time frame called 3 generations. Now, this is a very, very unique product. So far that I know is only offered out of Singapore, where the bank and the insurance company come together to offer you a product that will take care of 3 generations. So I just explained to you in a simple words. Typically, this one I only teach those who are in my coaching program. Take, for example, myself, I'm generation 1, first generation. And there's a product right now offered in the marketplace where in one single move, you become a millionaire with just $250,000. All right? Now, it's only possible because the bank and the insurance come together and create this product. So I bought this product for 3 of my boys. It means that from the second year onwards, I'm receiving one lump sum cash every year till the day I go to heaven. All right, so generation 1 is taken care of, that's me. But the moment I go to heaven, they will have to keep paying the second generation, which is my children. Every year, the same lump sum cash till the day they go to heaven. So generation 2 is taken care of already. So by the time we hit generation 3, which is my grandchildren, at that point they will decide, oh, shall we follow grandfather's tradition to get paid every year and we don't have to work for the rest of our lives? Or we inherit the one lump sum cash and do something with that money? I leave that decision to my grandchildren. So can you see right now why you are building your wealth? There's a game plan. The game plan is called greed, because you want to take care of your future generation and your immediate milestone to cross US $250,000 lump sum cash. That's it. And you become a millionaire overnight. So I've gone through with you 8 time frames, which is define clearly your time commitment to the market. Not anyone else's time, your time. So, where to find? Let's do that right now. And here we go. We're going to get ready for our trading for tonight. And remember, we are doing this because we are operationalizing the concept of where onto our platform. Right here. Ding! Here we go. Today, we are looking at daily bread right now. Make sure you click on daily bread and make sure the numbers here match what you see on your own computer. 114 earnings, 77 options. What does that mean? Remember the concept of war. What will cause a stock price to spike? There must be a wow event. And let me tell you what is this wow event. This wow event is known as the company's quarterly earnings. Right there. Is there an announcement date? Yes. When? Tomorrow. Because our software has already prepared you to play tonight. And they are showing you the companies that announce their earnings today after the market bell closes, as well as companies announcing earnings tomorrow before the bell opens. This cluster of stocks, 114 of them, is the one that will spike up. But the question is, which one? That's what we are going through right now. Okay? Is it repeatable? Yes. Every quarter, public companies have to announce earnings. They cannot escape. Thereby, you have a product that you can play every single trading day. That is called Daily Bread. How many of you with me so far? Show me a thumbs up. And why so many of you disappear from your camera? Angels! Where are you? Okay, I want to be very, very strict about this. In fact, let me share with you the sad news. Let me share with you the sad news. Because I implemented this discipline, quite a number of them wrote in to us and say, we back out of the class. We're not going to attend the class anymore. And to me, so be it. If you don't even have the basic courtesy to face your teacher, then there's no point for me to do this. All right? I don't want to spend time on people who are not committed. And thank you for all of you who stay committed. Please confirm you are committed. Oh! Thank you very much. Let's do it right now. Here we go. So we have all these 114 companies that will potentially spike up tomorrow. Then there must be a way to know which are the best candidates, which one have the highest probability of success. That's what we're going to do right now. So this is the moment our robot, our artificial intelligence kicks in. Ladies and gentlemen, I present to you all these companies that you see in front of you. They have been kind of processed through artificial intelligence to tell us we should prioritize our time looking at who first, starting with this column. Because over here we are showing you in descending order the stocks that have the highest universe net stock purchase. First one, Toronto Dominion Bank, 1.5 billion. Second one, 1.3 billion. Third one, 1 billion. And as you scroll down, after 1 billion, boom, fall off the cliff, 660 million. So my preference is always go to the particular stock with the highest net stock purchase. But we have a problem here. What is the problem? Because the top three candidates, they are very near to each other. The variance of 1.3 versus 1.5 versus 1, very close to each other. All right? So what else should we look at? So our first glance is to look at the top candidates. All right? Our second glance is to look at their lead investor. How committed are their lead investors? We call it Tai Ko. And those of you play stock market, you know this language called Tai Ko, the one who lead the pack. So I'm going to show you the details of understanding the lead investors. Start from here. All right? So how we organize the data is to show you every stock. There are 3 lead investors we present at the front end before you go into the fiat method. So this one, the lead investor put in 1.4 billion, and this is a conviction of 400%. Means previous quarter, quarter 3, versus current quarter, quarter 4, this guy decided to increase the bet by 400%. Wow. What the heck he knew that we do not know about? The second stock, the lead investor beat the first stock. This one is 11x, 1,110%. That guy probably knows something that nobody knows. To show hand, 10x. And the amount is close to 1 billion. This is 1.4 billion, so kind of half fight. The third guy, the lead investor, the conviction not that high, 286%, right? Compared to these two. So straight away, I get rid of the third guy first. Then I redraw. I just want to focus right now on here and here. Now, I'm showing you this is one approach of self-selection. Some of you may be very anal about the process. You say, I want to check everything. Of course, no problem, provided you have time. Like for busy executives like myself, I got multiple portfolios, all right? I will always take the most practical approach to just tell me which one to look at first. Then I spend more time studying the individual stocks. Now, some of you like to reverse the sequence. You say that, teacher, I will study in detail all the top 10 stocks. Then I decide all the top 10 which one to play. Also can. Up to you. I'm just showing you from a practitioner approach, this is how I do it. The data is all there. You can create your own method of selection before you go into the deep dive of understanding the company. How many of you understand this concept? Please wave your hands. All right, that's good. So it is built in a very robust manner so that you can have your own flavor of selection, all right? Now I'm left with these two guys. So top of my mind, I think about two things. Number one, first guy is a bank. What environment are we in right now? We are in a high inflation, high interest rate environment. Confirm bank will make money. Common sense. So for the bank, Toronto Dominion Bank, I think they don't have to do much, they'll just make money. Because the Fed will keep increasing interest rates. Then I scratch my head and look at the second guy, Canadian Natural Resources. The economy is opening up. Construction will take place. I don't know what resources they're offering, but I know there's momentum in the market already. There's a demand for resources, and in the event if a war breaks out, confirm all the natural resources will be in great demand. Okay? So it looks like they are on par. Now, since they're on par, then I make a decision, okay, I will spend more time tonight to study 2 instead of studying 1. Remember, you have to spend time each night. I'm not asking you to spend time all night long, maybe about 20, 30 minutes, that's all. So if I decide to study 2 companies, I will spend more time than if I just studied 1 company. Confirm? Yes? So the market is very fair one. You spend more time, you get more ideas, you connect more dots. So if you tell me you don't have time, please do not invest. Very fair game, okay? So I'm going to spend more time tonight with all of you to study these 2 candidates. Let me start off with the first guy, Toronto Dominion Bank, and please click together with me. Click on the name, tong, and you should see something like mine. I wait for you. You have 10 seconds to arrive at this page. Okay, here we go. I'm going to start the process right now. And by the way, the market has already opened the bell for 5 minutes. Typically, once the market opened the bell, the things that you see on the TV screen goes like this.
Because we gave you a lot of money.
Gene Cramer will be the one talking, and you see all the sectorial stocks will be featured.
The big issue here with the chip sector.
So right now he's talking about semiconductor chips. Certain times he'll talk about retail stocks, technology stocks, home stocks, energy stocks, defense stocks, commodity stocks, farmer stocks. Every day there's something new. That's why CNBC has the highest rating for financial news, all right? So this is what's happening right now. The market today, 2 green, 1 red, 2 green, kind of a confused market, no direction yet. Dow is on pace for 5th negative week in a row because of upcoming interest rate announcement by the Fed Fund. All right, so that's about it. Don't worry, let it play out, because the CNBC will be kind of your entertainment when you are trading alone. And I highly entertained by them. You know, when I trade, I'm the happiest man on planet Earth. I love trading so much. I'm left alone, and I give very strict instructions to my family members. They cannot just step into my trading room. I'll suddenly jump because I'm so focused on analysis. They must knock, get my attention. I say, open door, then they can enter. So you have to impose certain restriction in your house. Make sure you delight that enjoyment. And whenever I'm trading, my cats are with me, and I'm just enjoying doing analytical work. All right. So let's come back to Toronto. Step 1, we are looking at here. And right over there, what does it tell you? It tells you about a 4-letter word called the fiat method. Now, fiat is very easy to remember. You're here to make money. Fiat is money. F for fundamental. I for insider. A, alerts. T, technical. That's why it's called the fiat method. All right? So we have been very thoughtful about the process. And let me give you some backdrop information. When we design a platform, we say we want to design a platform designed for ordinary men, non-investors, new investors, retail investors, so that they don't get put off by the jargons of the market, so that they realize, hey, I can get started with a simple 4-step, and they acquire the interest to chase after wisdom. But if I'm going to put a lot of things on my platform, you know what? Most of the new players will say, I give up, surrender. Don't even tell me to start. Too much things to know. How many of you know I'm talking about? Wave your hands. All right? So you all must know why we build it this way. We build it this way because our sincere wish is everybody in the world should be investing. That's the way to have financial breakthrough. All right? So we are here at step 1. And at step 1, please make sure you only look at these 2 places. We have already solved the most painful part for you. Bang! Right there. Right there. Okay? What is the meaning of that? I want to spend a little bit more time articulating this. The universe net stock purchase, basically what it means is this. This company, Toronto Dominion Bank, every day there are Wall Street players buying and selling this stock. Every day. Some buy, some sell. But now, as in now, when we are about to make a decision, the robot will take a snapshot, bang, to tell us, at this point in time, now, what is the net position? Positive 1.5 billion. Taking into account those who bought versus those who sold. And it is a positive net stock purchase, $1.5 billion. Now, what does that mean? Let me tell you the meaning of 1.5. It means that all the people who put money into the company, because there's a net positive 1.5 billion, they have already completed their due diligence. This metric is known as the due diligence metric. And what kind of due diligence? They will not tell you. Everybody got their secret recipe. Some of them got accountants, got actuaries, got technicians, got MBAs, PhDs advising them. Some of them look at fundamental analysis, price-sales ratio, price-book ratio, price-earnings ratio, debt-equity ratio, 300 financial metrics. Some of them look at technicals, 200 different technical indicators, exponential moving average, Wilson indicator. There are like 200 different technical indicators. Some of them look at the stars and the moon. Some of them know the CEO. They won't tell you what is their due diligence. But end of the day, the money reflects the due diligence. As a result, we call this the mother of all metrics. That is what we have created, the universe net stock purchase. I call it the mother of all metrics. Because I don't really care what method they do. End of the day, I only care about, did they put money into the stock? How many of you are with me on this? Just wave your hands. Make sure you really, really understand this, because there is no way any one of us can find out the secret recipe of all the money managers on Wall Street. So sometimes, I go on social media and people are saying that, oh, we know the Buffettology method. I laugh at them. How would you know? Because Warren Buffett didn't even publish a book about his strategy. How would you know? And I'll reply, I know, because I got his data in my platform. But how would you know? You don't have the data, right? So there's a big difference. So we covered the universe net stock purchase. We also uncover the options market, because some of them will hide their trades inside the options market. So we track, are there more people buying calls versus buying puts? If there are more people buying calls, that's a universe net call put purchase. There are more people buying calls, positive 191 million. All right. Now, between these two numbers, usually it's about 10 to 20%. 10% of 1.5 billion is 150 million. All right? But what happens if you have the options more than the stocks? Let me show you an example of that. Let's look at Tesla. Tesla, the stocks is 13 billion, the options is so close, 9.7 billion. There's one more where the options more than stocks. I can't remember which one already today. All right. But I want to show you something very close. This kind of signal is like, holy moly, once in a blue moon, where everybody agree. It's very rare. When that happens, everybody push the stock price up. All right? So let me go back to our Dominion Bank, because we have a catalyst event tomorrow. And of course, we put some other data right here. All these are self-explanatory. We have videos on that. So please go and watch the videos. I should not spend time just to explain more. I only spend time teaching you the most important things. All right? So you can explore on your own. I'm done on step one. Do you realize that I don't even talk about market cap or any other thing? Because my mind is already made up. This is the most powerful metric. This covers the universe of all institutional players on Wall Street. And you cannot be bigger than them. I don't listen to retail traders because they are small fry. I only listen to the big guys. Step 1, done. Step 2, insider. Here we go. Dong. And this is the step you get to know the lead investors. First of all, $3.3 billion went into the stock in quarter 4. And in step 2 is very unique. There are 3 things you need to do in step 2. So we're at step 2 right now. We need to go through universe, top 100 shareholders, all right? So check this out. Make sure you're able to see the same thing as I do. I wait for you. You should be looking at universe right now. Right, looking at universe right now. Here we go. Scroll down and see this crazy column. What am I looking out for? I'm looking out for big percentage. This percentage is to tell us the previous quarter before quarter 4 is Q3. Between Q3 versus Q4, did this investor increase the bet? Clearly for this guy, 400%. This is like crazy. Because fundamentally, I ask you a basic question. What can fundamentally change in a company over a 3-month period? Because previous quarter, Q3 to Q4, is just passed through 3 months. How much can a company change that justify a 400% increment in bet? Understand this number. That guy better know something that we do not know, but he won't tell us. But it's reflected in the momentum. I call it momentum. But the sad truth about this company is that the rest, low conviction, 7%, 1%, 4%, 2%. This is pathetic. I look at this, I'm not interested really. Because I know collectively, not many are interested. You see, all less than like 10%. Right? So by the time I hit Goldman Sachs, which is like 10%, only $43 million bet. This $43 million is peanuts compared to $1.4 billion. So that means there's only one single manipulator of the stock, and the gentleman is called National Bank of Canada. At this stage, I say, nah, I'm not going to proceed anymore, wasting my time. How many of you understand so far? Wave your hands. Every step, the moment you feel uncomfortable, walk away. We got a lot of things to play every day. Don't rush, right? Walk away because I feel there's no high conviction among all the lead investors. It's wasting our time. Close it off. So what do? Close off the tab, and I go to my number 2 choice. I didn't waste time. Because you really don't have much time. You are only given 1 day to think about what stocks to play. Remember, you're on daily bread. You get in the day before the war. Click on Canadian Natural Resources, and go through step 1 again. So here we go. Make sure you're on the same page as me. Make sure you're looking at this metric here. Ready? Once you're ready, here we go. Tong! Step 1, 1.3 billion. Damn good. Step 2, the call put is negative, but this negative is like negligible. So small, doesn't matter, right? But because earlier on, under the daily bread selection, I asked myself, what is the natural resources that this Canadian company is talking about? I need to know. At least got to know it. So I scroll down, and the About Us is shown right here. So I have a quick read. Okay, it has mention of crude oil, natural gas liquids. Okay, so it's into the supply chain of crude oil, all right? And the rest, I can have a quick read through, all mention about crude oil pipeline. So to me, at this point, my mind is already made up. Made up of what? I'm already predicting a war may break out in the year 2024. And that's something I typically share during our cozy live trading event. I just give you 3 things to think about. 2024 will be the most sensitive year we ever encounter in our lives. 3 big events. Number 1, January will be the presidential election of Taiwan. And if you have a pro-independence candidate running for the presidential election and he wins or she wins, let me tell you, there'll be an outbreak of war. Which, in my recent trip to Manila, the US naval forces are already in Philippines. They're already uploading their supplies on the islands at the northern tip, Luzon. And I was so shocked. I say, what the heck? They are so fast. President Bongbong just signed, and here they are, back to the colonization. Do you know how many years it took for the Filipinos to drive the US forces out? And now they are back again. Second event, March 2024, 4th Bitcoin halving event. And typically, nearing to the countdown, there will be a lot of volatility, and Bitcoin will become the safe haven in the event of a breakout of war. So we are getting ready for that. Third event, 5th November 2024, which is the presidential election in the United States. 3 big events that resulted in a 4-star general in US proclaiming that there will be conflict in the year 2025. Right after the new president is inaugurated in January 2025. So go and think about it, because Xi Jinping really cannot live that long, and he has to take back Taiwan while he's still alive. So I take all this that I know about, I come back to this guy who's handling crude oil. I think this is a very, very good company to think about. Step 1, pass. I go to step 2. Ding! So what are we focusing on? Step 2, $4.3 billion bought into the stock. 224 institutional money managers bought into the stock. You're standing on the shoulders of giants. And let's take a look at their commitment compared to the bank. Look at the percentages. We have a 11x right here. We have a 830% right there. We got a 15x right there. Holy moly, what do they know that we do not know about? And this guy, isn't him the guy who took the lead in the Toronto Canadian Bank or Toronto Dominion Bank? Same guy. National Bank of Canada. So as you start going through this process, you will remember names or you start connecting the dots, right? So my decision to get rid of Toronto is a good decision because this guy also invested in Canadian natural resources. Can you all see that right now? And his conviction, 830%. The other one, 400%, but dollar value, much more. It's okay. Now I'm chasing the percentage. Now, after that, I kind of scroll down and get myself acquainted with the investors of this stock. I want to get to know their lead investors. I start going down. Ding, 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 ding. Canada Pension Plan Board. Whoa. Very conservative, very safe. All right, I go down. Oi! Renaissance Technology, one of my top 100. I go down. Oi! Vanguard, top 3 fund manager on planet Earth. I go down. Oi! Millennium Trader got involved as well. Oi! Top 2 Sigma, which is our top 100, got involved as well. Then I go down. Any other guys I need to know about? Any more? Just go down, take a look. Take your time to read them, study them. Better to know big names than to know small fries. And then you go down. Okay, looks like we're almost there already because the dollar value start to get small. I think good enough. I'm happy with the universe. Then I go to top 100. Dong! Click on top 100. And here we go. Oops, let me just refresh again. Okay, engineer doing something. Hang on a second. Let me ask them. Hang on a second. Okay, refresh. Okay, I think they're testing something. Let me come back to here. Okay, what have we gone through just now is still step 2 of FIAT. And, okay, he's replying at this moment. Let me check. Okay, they're checking. Okay, we're back to here. Now, maybe at this point in time, I need to jump one slide so that you're prepared for the execution, all right? So let me go to question number 5 first while they're sorting that out. And by the way, on your website, if it's up, you just give me a thumbs up so that I know when it's up and running. Oh, it's up already? Not for me, not too sure. Let me check again. Oh, it's up already, sorry. It's back. Okay, so we don't waste time. We are back. And there's a little bit of deviation here. Remember our universe net stock purchase is a positive 1 over billion. But looks like among the top 100, they don't agree. Because if I look at just the top 100 money managers, there's a negative 237.6 million. All right. So this is the part. Do I get affected at this moment? No, because this money is not that big. Get used to seeing these big numbers. Typically, I'll look for like, if this like negative 800 million, then I think I'll be alerted, right? So on this page, what we've done is this. We show you left and right. Please watch. Okay? The left-hand side, these are those who bought on the left-hand side. And the right-hand side, these are those who sold. Okay? Now, I like to do this comparison to just to know who's profit-taking, who's dumping the stock, just to have a feel, right? So, over here, Citadel got out already, 0.72. Not got out, it just sell off, all right? But the one who got out 100% is George Soros. Is out. Ray Dalio is out. But do we have fresh money coming in? Yes. James Simmons is in. Millennium Traders are in. And John Albert over there is also in. So at this point, I still feel comfortable enough. I proceed to the next step, shareholders. Let's click on shareholders. Dong! And here we go. Now this part here, what I'm looking out for is this. 513 shareholders. I want to look across it generally to develop a feeling. Among the shareholders, did they give up on the company or they add on their conviction? So this is what I do. I see how many red out there. There's like 3 red, 4 red. Are there more green than red? Okay, there's more green than red. So far, so good. And we got a pension plan and a bank supporting it. All right, so these two are good. And I scroll down. Which other names are the key shareholders? The National Bank here, 800%. All right, and this other bank, Toronto Dominion Bank, was what we were considering back then. They also own the Canadian Natural Resources. So looks like we are thinking about the same thesis about crude oil, right? And then I go on down. Any other names that we need to know about? There's another pension plan got involved. This is very conservative. Any more? Oh, Her Majesty the Queen is also involved. All right, so you get to see all these interesting names, get to know them, and you are very delighted that you're trading alongside with them. So at step 2, I'm done. I'm feeling very good about it. Without further ado, I go to step 3. Now, step 3, what do we look out for? Here we go. Step 3 is the specific step we call connecting the dots. So let me explain to you. You see this word here, connect the spikes, is connect the dots. And the way we go about presenting the dots is vertical timeline, vertical in sequential time format, all right? These are the future dates. This is the today date, 1st March, and these are the past dates. So we start to scroll down, right? So it's telling us here, date range 14 Feb to 28 Feb, 131 news just on this company. Click show more. Now, am I going to read every single one of them? My answer to you is no. I just pick out what is really important to me. I just read keywords. So I'm very used to reading this way. And I pick out this one. Rises Monday, outperforms market. Right? There must be a reason. Maybe I want to investigate this new. I click on it. Let's read. Why Canadian Natural Resources outperforms the market? Uh-oh, I hit a paywall. I cannot proceed. Then I close it up. Never mind, continue to read what other news I can pick up from it. And basically, you are reading articles that support your thesis. What is my thesis? I believe the stock price will spike tomorrow because the natural net stock purchase is a positive number. So everybody expecting it to go up, right? So again, talk about remarkable plunge in natural gas price. Not too sure that's how related. Nope. I just go down. So some of them not so related, we just skip. And generally, I try to pick out keywords. Nope, this one not related. And I go down. If you don't find anything, it's okay. Just make sure it supports your thesis, all right? So my thesis is Canadian major has a new chief executive and chairman. Nope, not related to us. Nope, nothing much. I just continue, go down. Okay, down here got 13 news mentioned. Maybe this one is more precise, all right? So natural resources, no, nothing much. These are the recent purchase. We gone through it already. There's a big player that just came out in this year, 1.8 billion. Okay, I'm going to anchor this guy. This guy didn't appear in Q4, but appear in Q1 this year. How do I know? His average price is 54. he bought on this date, 3rd Feb. All right, how much total? 1.8 billion. So I straight away compare his average price 54 versus current price 57. The price has already moved up a little bit. All right, so we can still trade. We are not paying much more than the Capital World Investors Group. I think we are paying quite close to it. Of course, if you want to get at their price 54, it may not happen tonight. Because tonight we have to get in to play this guy. Wave your hands if you understand that. Wave your hands. Yes? Because we are expecting it to spike tomorrow. So continue. Oi. Janice Henderson also bought into it. Pension Investment Board also bought into it. Any interesting things that I need to know? I think so far so good. I covered enough already. I'm done on step 3. Oops. Hang on a minute. Let me just adjust. Now I go to step 4. Technical. And here we go. Now make sure you do this little step here called view full chart. All right? So I wait for you guys. Click on view full chart. Dong. And then I also like to go to the bottom here. I also like to go to the bottom here to enlarge the chart, to kind of increase the timeline, right? So I increase it such that I can see more quarters. Now what I've seen right now is this. This quarter here is positive, right? You can see. Followed by 2 consecutive negative quarter. Negative, negative. And then it's back here positive again. So if I combine these 4 quarters of performance, you will see the average price. Ready? Here we go. Let me show you how I do that. I go to the bottom of the first box here. This is my first box. And I go to the top of the second box here, and I expand it out until here. Okay? So if you truly want to get a fair price, or what we call average price, you will be buying at the middle of the red box I just drawn. So what is the fair price? Probably $51 or $52 right there. What I just demonstrated in front of you is what we call extreme value investing. I'm buying the average price of all these insiders, here. Quarter 1, quarter 2, quarter 3, quarter 4. One entire year. If I can get 51, that is the extreme value price. It also tells me another thing. What's the worst case for this price? The bottom of the red box, $40. Right? But if the thesis is correct, that means to say the price is ready to break out of the red box. So I'll expect maybe from here, boom, hit to 75. So as I draw the boxes, I tell myself all these scenarios. I'm talking to myself. You have to talk to yourself this way. So one more time. Step 1, what do you do? Step 1, you draw the box. So I'm going to repeat again. Over 4 quarters, right there. This is the lowest price of the 4 quarter right here. And then the highest price is right there. And then I enlarge it. So I know if I'm in this range, I'm very safe one. Right? It's just have to wait for time. This range here, $51 range. Okay? Just have to wait. Now once you wait, then you know worst case scenario goes to 40, best case scenario tomorrow it spikes up and break above the box. You already talk yourself through already so that you don't panic. How many of you okay with this part? Wave your hands. So if you never do this part sufficient, you know what will happen? Fear and greed will creep in. You will just keep panicking one. But you do this if sufficient, no matter how the price performs tomorrow, you're already prepared for it. Because you can see the three scenarios, either up, down, or sideways. Anyway, this guy is backed by so many insiders. How much you're putting compared to them? Peanuts. That is the psychological game we play every day. You can see there are more people putting more money than you. Please confirm. Unless we got hidden billionaires among us. All right. These guys put in more money. They got more resources to do the analytical work. You cannot beat them. You can only trade with them. So, you know, I gone through like more than 20 years to eat my humble pie. In fact, you know, sidetrack a little bit, in the beginning of my journey, I wanted to crack the holy grail of every single money manager. I want to know which financial metrics they were studying. After some time, I said, it's too painful. No way they will tell me. Even if they tell me, it will be a fake number. And finally, I resolved to the fact that stop wasting time, just follow their money. And that's how we build Spiking. All right? So at this stage, you finish the 4 steps already, FIAT. Now you can do one more thing, which I highly recommend, and that is look at this company from the Yahoo chart. Right. So click back on the arrow there. Bong. And we already put a shortcut for you right there. You see the view Yahoo chart shortcut there? Click on it. Ticker symbol CNQ. And let me just click on it. CNQ. And here we go. So the Yahoo chart, which is a free chart, does a much better job on their stock chart software. So that's the reason why we put the link right there. If you prefer, look on the Yahoo chart. It's very clean, very beautiful. And typically what I do on the Yahoo chart, let me show you. Go to settings. Please do that right now. It's a one-time effort. If you do it right, forever it's on your computer. Click on settings. Make sure yours is exactly like mine. 4 ticks. I wait for you. 4 ticks. Okay? Once you have the 4 ticks, next thing is here. Make sure yours is a candle. Okay? And today you need to put 2 lines, which, you know, I've been updating our students. This year I started looking at 2 lines. Last year I was looking at 1 line. We're going to go to this place called indicators. Click on it. And select the first guy, moving average. Okay? And I remember by red, green, blue. So start off with 200. Change to red. I'm waiting for you. Now this line is a very important line. because we are waiting for the market to turn around right now. You see the behavior. Click Save. Straight away, the 200-day simple moving average line is presented in front of you. Now, what does that teach us? It's telling us this is that line, right? And every time the candles fall below the line, it will bounce up. Right, this is the basic line. Then I'm going to add one more line, red, green, blue, go back to indicators again. Again, select moving average, which is simple moving average. Red, green, blue. Now I'm going to have green, which is my 50-day line. Because it's a shorter day, it will move faster than the 200-day. That's why it's called green. Make sure you have that. I wait for you. Click Save. Now, this is the part. Later on, when we look at other stocks, it's going to be much more exciting. You see the turnaround. Now, what does that mean? I'm going to trace the green line. Typically, the green line, when it's above the red line, the stop price will keep going up. That's why during this journey here, you can see the candles are always up. But the moment it crosses below the red line, stop price will start to move down. But then down here, there's another big cross up again. All right? So what it actually means is that right now the green line is above the red line. If all the insiders are correct, remember, we got two guys who put in more than 10x. Wave your hands, confirm. You saw that, 10x? Yes? That means they are betting on something that they know. That's why they increased their bet by 10 times. They probably have lunch with the CEO, or the wife is the good friend of the CFO wife, or whatever. They're expecting this guy to go up. Because you can't have a 10x decision where the business cannot fundamentally change over 3 months. Okay? So that is the logic of insider trading. But they will never tell you what they know. But we are tracking the money. So this is another way to look at the chart. Really, really beautiful. So at this time, we're going to pose a question. And this is a fundamental question. You put in your fair amount of hard work. We analyze it together. In fact, I'm really doing it very slowly. Typically in a normal way, in a normal day, I do it in less than 5 minutes. Because I'm very used to the data already. For you guys just started, take your time, really understand each step. You'll see the beauty of our design, all right? Now we'll do a polling. What is your decision? Okay? The decision on the natural resources company, we will not mention the name here. You say buy, means you enter buy, or sell, or do nothing. Okay? You must have an outcome on buy, sell, or do nothing. I cannot think of any other outcome that you can have. Let's put it to the vote. And here we go, tweet. View the tweet. All right, you have 1 minute.
Tonight we're running on the right track. I know we never gonna look back. Oh, I just wanna have a good time. Call me whatever. I'm up for anything like that. Oh no, we don't wanna do slow-mo. So tonight we just let go. To the beat in the streets, every freak out, sing like. Sing like.
So at this point in time, some of you might be thinking, you mean teacher, that's all you do? Yes. What else can you do more to make a better decision than mine? I ask you. And make sure that do more that you do is really, better information than what I presented to you. Because some of you think that it's not enough. You got to research more, read more. I mean, what else can you do some more? So this is the part many people didn't realize, that it can be easy provided you have data. But for many people who do not have access to our proprietary data, you know what? They are suffering out there today. They have to read many things. But do we have to do that? No. Because we are the mother of all metrics. The net stock purchase has the best due diligence of the best money managers out there. Now, does it mean it will always spike up? The answer is no. When we are in a good market, like a bull market, doing this approach, let me tell you, it's like almost sniper, one shot, one kill. But because currently, right now, we are dealing with macro environmental factors, like the inflation is still high, the Fed still wants to raise interest rate, there's confusion right now over Taiwan, whether they will launch a military strike. The North Korea wants to launch another ICBM. The Ukraine war is still fighting on. There might be another balloon that will float across the United States. There are many strange things happening. Are you with me? Wave your hands. Those are the crazy things that in an environment like this, sometimes black swans will happen. But I ask you, how much more can you analyze? How much more? So let's take a look. In fact, more than half of the class decided not to even bother to vote. Why? I don't understand. You come to class, but you don't take part. Right? So something I don't understand. But those who voted, can you see the difference here? 90% say want to buy, 10% say do nothing, because you feel that. You mean that's all the analysis? I say yes, that's all. Because there's nothing more you can do better than this. I welcome your feedback. All right? So if that's the case, then we go back to the chart. Since right now we are prepared to enter, right? At the point of entry, we have to tackle the next question. Now, this is question number 5. Please get ready. Here we go. When to enter and when to exit. The question of when. Okay? So the question of when, we have to take a look at all the past spiking up experiences or examples. Let me switch back. And let's take a look at this company that spiked up today. Kind of like crazy. And you need to understand the logic of spike. Here we go. So first of all, let's start off with down here. Okay? Look on the bottom left. Right? Typically, the market will start at 9:30 a.m. Eastern Standard Time. Can you all see the 2/27? Please confirm you can see 2/27. Okay, that's good. You can see, Then, once the market opens, okay, hang on a minute. Once the market opens, 9:30, dang. Go to 12 o'clock. Then it closes at 4 p.m. Eastern Standard Time. Now, this is all reflected in the gray-white background here. Okay? But the market closes at 4 p.m. Eastern Standard Time, right here. And you can see right there, there's no more volume spikes. Because the people who are trading there are the market makers. You cannot see them already. The retail traders are not able to trade after the market bell close, all right? So this company got a very good news. Boom, spike up. Now, how do I go about seeing this chart? Because I click on 5-day. Now, if I click on 1 year, hang on a minute. Can you see the big spike up here? This is the big spike up. Look at the green volume below. Big spike up. Okay? But to understand what happens behind this spike up, I click on 5-day. Ding. Okay? So now the question is, teacher, you say get in 1 day earlier than the war, get out the next day, but the day I get in at which time? So I want you to focus now on here. This is your window. Your window starts from 9:30 a.m. to 4 p.m. Eastern Standard Time. This is the trading hours. What time should you get in? So I'm going to use this to explain to you. When I first started trading and I was crafting this perfect holy grail approach, let me tell you how radical I was. In order to make sure that the moment the market bells open, there are always news coming in about the company, right? You can come in at 10 o'clock, 11 o'clock, 12 o'clock. In order to make sure I got the best informed decision, you know what I'll do? I'll wait until the last minute of the closing bell, just to make sure I got the latest information to make the best decision. That's how anal I was. And I entered always in the last 3 seconds. So let me type this out. So you want to be real solid trader, last 3 seconds. Why? Just to make sure that you got the best information coming in to make an informed decision. But let me tell you the secret. Because I'll enter in the last 3 seconds, and I'll also get out in the first 3 seconds. So let me type this out. Enter last 3 seconds. And exit first 3 seconds. So averagely what I've achieved is about, the best time I got is like really the last second, 1 second left. And exit first second. So 2 seconds is my closest already. You cannot beat my record already. Now these 2 seconds or 3 seconds or 4 seconds, essentially what I'm doing is I don't allow my emotions to take control of me. My emotions got no time to react. I just straight away, boom, I must get out in that 3 seconds. All right? But this way of trading was in my early days when we didn't have the complete insider trading data. It was very, very hard work, pure hard work. I did that for 5 years of my life. I sleep opposite of the people in my country. When they are sleeping, I'm trading, right? So it's like typically I sleep around 4 a.m., 5 a.m. Singapore time because I follow the US Eastern time, right? That was my foundation in the first 5 years, pure options trading. Now, right now, we built the spiking software. Do we still need to do that? Yes or no? Now, most of you, physically, you cannot handle it because next day you got work, you'll be exhausted, and you're not like a hardcore trader like me. You know, I believe in real good hard work. And I show you visually how powerful this idea is. All right? So take a look at this company. If we enter on the last 3 seconds of the bell, which is here, and we get out on the first 3 seconds of the bell, which is here, okay, that's a signal I pushed my voice too much already. Look at these two difference from here to here. All right? Why this is ideal, number one, your emotions are not allowed to run wild. Number two, even if you choose to wait, to get out somewhere up there, you're only making marginal improvement on your percentage profit. What we seek to do, clean in, clean out, we make a big difference in our percentage profit and we move on. But some of you may struggle. You say, teacher, why don't wait? You can go up some more, right? Yeah, you can wait. But sometimes after it spike up, it can also go down. Are you with me? So in order to avoid this, whether you go up or go down, you already caught the spike, just take the profit. Now, I welcome you to think about these three scenarios because it depends. Over time, you'll finally come back to use my method, I can tell you, because I tried all the methods already. So no point struggle with that. And one of the best ways for us to maximize our profit, which is your homework, is to use a trail limit order. A trail limit order ensures that you can get the highest profit, and if it turns against you, you get out. And that's the best way I found, all right? So let's take out our interactive broker app. So here we go. For those of you trading first time, I will show you some of the screens that you can see on your app. Oops. Let me show you that screen. Hang on a minute. All right. So it looks something like this. Let me just put it up. Here we go. Okay. So take out your IB app. If you're not using IB, I'm not too sure which other platform you guys are using, but typically our step one goes like this. Click on the trade button of your IB app. I wait for you. And if you're not comfortable trading with real money, please start with paper trading money first. Use the paper money. In IB, you're given $1 million on your paper trading account. And we give you all those instructions before you come to the class. So just be aware of it. And here we go. Right. So step one, click on trade at the bottom. Then step two, on top here, we will type in C and Q. Okay. That means you can click on this code button. There's a code button here. And you type in C and Q. Check the name of the company, Canadian Natural Resources, and we're going to buy stock for tonight. Tap on stock. Right, so we're going to buy stock right here. And after you click on buy stock, you will go because we are not trading options, you go straight to the bottom right, there's a buy button. Click on the buy button. And right now, stop price is trading at 54.48. All right. Click on the buy button. And go to this place. You will see the limit price. Something like a limit price, right? This is the place we're going to key in our price. Okay, I wait for you 5 more seconds. We are buying stock, we are not buying options. And I need to see on my big chart right now to determine the price to get in, right? So right now the price is around here, 57.56. I'm going to bargain by looking at what's happening right now, how the price move, all right? I changed the window to 5-day in order to see on the minute-to-minute level how the candles perform. So I'm on 5 days. And each candle is 5 minutes. And you can see that it has gone up, then go down, then gone up again. So I always try to buy lower than what is shown on the current price. So current price right now is 57.65. I'll aim for 57.5. Okay, 57.5. Time in force, I select day. Time in force, I select day because if I don't get to buy tonight, tomorrow I'm going to play a new game. I'm not going to keep buying this guy because I just in here to catch the spike. Double check. You can click preview on the bottom right corner of the IB app to see how much cash is involved. Slide submit to buy. Done. I placed my order. So now I'm waiting for the price to get filled. And that's it. Okay? So this whole step here is found on this screen here. And this is the part that you'll have to practice on the IB app. The tool is always there. Just make full use of it. Go and practice. In fact, they also have videos on the Interactive Broker YouTube showing you how to place order on your mobile device. Now, I only got one suggestion for you, and that is this. Always trade on your mobile phone, not on your desktop. Don't make a mistake. You must learn to trade on your mobile phone because why? Sometimes, you know, the market is moving very fast and you are having a stomach ache. That's it. You cannot bring your big computer to the toilet, all right? And sometimes I'm traveling, I cannot bring my big computer. So now my entire training is trading on the mobile phone. Very convenient, very fast paced, and you can be anywhere in the world and you continue to trade, all right? So please practice on the mobile phone. And the design by IB on the mobile phone is like so simple. Now, if you have difficulties, means that you have not set up your trading account before coming to the class. So please do that. This is your homework. And how to place the orders, it's quite simple. Let me run through with you all. Like step 1, you go to trade. Hold on a minute. Step 1, you go to trade, which is the bottom here, so that you can tap on the button called code. Okay? Now after you've done that, then and only then, there's a place for you to search for the company that you want to play, which is somewhere here, up here. You search for it. And we only buy stock, so you check the name and you select stock. Okay? Now after you check this, you select stock. For stocks, it's so simple, unlike option. After you select the stock, you look at your bottom right, there will be a blue button called buy. You just click the buy. And then what was my price? Select under limit price. Select good for the day. My price is 56.5. And then the day is just good for the day. And slide to submit to buy. Done. But before you do that, please click on this button called preview. It will show you how much money you are trading on. And this is the point in time I need to show you our golden commandment. What is our golden commandment? Thou shalt not invest more than 5% of your capital into each trade. So this is golden commandment. Thou shalt not invest more than 5% of your capital into each trade. Now, it also means that you can play maximum 20 different companies. Because 100% divided by 5, it means 20. So maximum 20 stocks in 1 month. You cannot play more than this because you run out of capital. All right? So what's the meaning of 20 stocks in 1 month? 1 week we got 5 trading days. 1 month we got 4 weeks. 5 multiplied by 4, 20 trading days. That's why we have the product called Daily Bread. You just play 1 stock per day. And every day you just find the best stocks to play. That's how you start your training. All right? So wave your hands if you understand this. Okay, one last chance. Go and take a screen capture of this. Don't miss this. This is very important. Wow, 11:45 already. It's crazy. Okay, we got 2 more questions. We're not unraveled yet. We'll continue tomorrow. But let me sum up what you've gone through today. Okay? Now, tonight, the first day of the training program is to make sure that you're really answering a very important 6 questions in the marketplace. Okay, so let me kind of bring you. Oops. Hold on. 6 questions that every trader must ask. So what we've done is we covered about 5 questions in total. There's 1 more to go, all right? So the first question is how to make 5 to 100% profit return in 1 day. And then we show you the difference between using stocks versus options. Now for a start, I highly recommend that you only buy stocks. Most of you are not ready for options trading yet. Now, for those of you interested in options trading, then you come to my Cozy Live Trading. In my Cozy Live Trading, then I trade options, as well as in the program Trade Through the Night, I trade options as well. Okay, that one we need to spend more time teaching you about strike price versus expiration date. Then the second question we ask, if we want to hit 5 to 100% in 1 day, then who are making profits consistently? They are the best money managers out there. And thereby we start our search, how do we build a platform that track real-time basis what these guys are buying and selling at any point in time. We show you the 8 categories of investors and the best of them, top 100. And then we move on to the third question, what caused a stock price to spike? What caused a stock price to spike? So we dealt with 3 keywords. First is cozy. The instrument must be correct, which, I spend the most time talking about instrument, stocks, options, cryptos. But the foundation starts from stocks. Then and only then you go on to war W-A-R. You start a war, you make sure you're able to find where are the spikes that fulfill wow, announcement, and recurring. Thereafter, you start the fiat method, which we've gone through just now. So where to find the spikes is a question of time commitment. We give you 8 categories of time: 1 day, 1 month, 1 quarter, 1 year, 1 election cycle, 1 decade, 1 lifetime, and 3 generations. That is the entire genealogy of an investor's roadmap. How much time you commit is dependent, highly dependent on what's the strategy you deploy to find the stocks to buy. So we demonstrated to you under 5th question, when to go in to buy and when to go in to sell. So we dealt with the idea that, okay, we go in to buy and sell, if possible, last 3 seconds and first 3 seconds. Now that is truly what I want to teach you tomorrow, the art of the time squeeze. But for tonight's purpose, you realize that once you catch the spike, anything more or less is just marginal. Main thing is to catch the spike. That's why we encourage you, go in 1 day before the announcement, next day after the announcement, you get out. Now, in the past, I tried to squeeze it within 3 seconds. Right now, with the data of insider trading, we don't have to do that anymore. We can enter right now by bargaining a little bit cheaper. So we bargain for 56.5. If we get filled, done, I'm good. If it doesn't get filled, every day there's another candidate to play. So thereby completing 5 out of 6 questions for day 1. Now I'm sure you guys have many questions for day 2, don't worry. Just list down your questions. Tomorrow when we come back, we'll start off by addressing any questions. Let day 1 sink in first. You need to sink in because for those of you who are very new, we designed such a simple process, you feel that maybe not enough. I can tell you, you cannot do much more than this. All right, I think this is more than enough to complete the study and most importantly to fire off the trade. So tonight, day 1, I'm very happy to announce to all of you, you have completed day 1. Please give yourself a big round of applause. Yeah, you done day 1. Homework for tonight. So we've gone through an example of selecting fiat. And of course, under Daily Bread, you can manipulate the date range to see more companies. Tomorrow we'll play more companies. But for tonight, I think it's good enough. You look at one good example, follow through. And tomorrow, there will only be 3 outcomes. Number 1, stock price spike up. Number 2, stock price goes sideways, no reaction. Number 3, stock price goes down. Are we prepared for it? Yes, because in step 4 of technical analysis, we really plan out the 3 scenarios, all right? So this is the season. You have to go through this period, and tomorrow I'll analyze for you why over time stock prices generally go up. So this is enough for day 1. Thank you so much for your cooperation. For those of you, keep your camera on throughout. I really appreciate it, especially I can see your face any point in time. Some of you try to play hide and seek with me. I'm not too sure why. You're too shy or what. But I hope day 2 will be great. So get ready to come back tomorrow with more questions. And then we work on your questions. Now, the value of the program depends on the value of the quality of the questions that you ask me. All right? So think through one night, write it down on a piece of paper. I'll give you the platform, the forum for you to ask me more questions. Thank you for completing day 1. I shall see you guys tomorrow. Thank you. See you tomorrow. Good night. Bye-bye. Thank you. Good night. Good night.
I try
Good night.
so